2020 stock market crash. Buying the stock market crash. Stock crash 2020. 20 predictions for the stock market.
Bro, it's over. I should have never invested.
The stock market's just gambling. I'm so dumb. I lost $10,000. Oh well, time to sell all my stocks. Hey, it's Lucero Boy. Remember, I'm not a professional financial advisor. Any advice or information in this video are for entertainment purposes only. Do your own research and seek professional advisement when appropriate. Right now, we are currently in a volatile market filled with uncertainty. States declare lockdowns, layoffs spreading, businesses closing, and the inevitable drop of profits. The market follows this, ending the 10-year bull market. On average, bull markets last for 4.5 years. Everyone knew it was going to happen sooner or later. The pandemic just happened to be the trigger for it. During this period of volatility, I'm going to tell you guys what my plan is after losing $10,000 and what you should do too. Let me know in the comments how much you lost in the stock market so far, or maybe you lost nothing because all your money is in your mattress, which technically would have been a better investment than investing in January. So I started aggressively putting my money into index funds at the end of December 2019. I more or less started buying at the top of this market. So we're going to ignore this dip here. It doesn't represent the market. I was just moving some funds around. So what I was thinking and what a lot of other people were thinking since 2009 was, wow, I'm so smart. Look at my investments, all they do is go up. This is so easy, everyone should be doing this. I'm a genius, I should have been doing this sooner. Just buy and hold, super easy. I don't know why not everyone does this already. You can see how my portfolio went up day after day as I increased my portfolio positions weekly. Despite fears of the coronavirus in China, we still had a growing market in February. So market volatility started around February 21st, right about here. And I saw the market dropping, but I already knew what my strategy was. Just buy and hold, really simple, it'll go back up. So the market continued to drop until around February 28th. Around February 28th, Trump announces increased travel bans and acknowledges the coronavirus threat. The markets rally back up until March 4th. See, I knew it the whole time, just buy and hold. Look how pretty much no value has changed from February to March 4th. Nothing to worry about. After March 4th, however, the markets begin to drop. It begins to drop and drop and drop until about March 9th to March 10th. Around March 10th, Trump announces an economic stimulus plan, as well as increasing travel bans with Europe. The market then closes with a crazy rally. Look at the jump between March 9th and March 10th. At this point, I'm wondering why, wow, people are still worrying about this. It's not a big deal. Look, it's gonna go straight back up again like it always does. And since then, the market has dropped consistently day after day. Until today. Right now, all of my accounts are down about 30%. So this is my taxable account at $12,000, a loss of $6,000. And my Roth IRA, which has a loss about almost $4,000 at 30%. So I've lost $10,000, right? It's all over for me. I should just sell all my stocks now and cut my losses, right? What do I do now? Alright, so I'll tell you what I'm gonna do. I'm gonna go to my automatic deposit and I'll make sure that I'm still depositing $480.77 every week. And then I'm also going to make sure that I am set to auto invest. Alright guys, that's the whole video. I'll see you guys next week. But seriously, it's important to understand that I still own these stocks. Even though the price drops, I still have maybe 100 shares. I don't lock in those losses until I sell those stocks. The only time I would ever need to sell a stock is if a company was going bankrupt and the value of the stock was going to go to zero. I'm primarily invested in indexes, which are a basket of companies. Yes, the gains and losses just mirror the market, but the chances of just flat out losing the value is close to nothing. The reason why I can do this is because I have the power of time and financial security. I don't need this money. And I am confident that in a 10 to 20 year period, every dollar I have invested will give me a positive return. Seriously though, these numbers are very scary. People that are retired or planning to retire, and those of us that have been laid off should be very worried. That's why it's important to have a diversified portfolio. I'm still in the middle of balancing out my portfolio. I just opened it up in January, so a lot of the allocation isn't exactly where I want it to be. But as you can see, a lot of my portfolio is in aggressive dividend investment indexes. As you can see, each one has dropped about 30%. But if you look over here on my bond index, you can see how it only dropped 4.8%. The reason why you want a diversified portfolio is because the different positions that you hold have different volatility and risks involved. So if you're nearing retirement, a lot of managed plans will allocate your positions to stocks with less volatility, so when you do need to withdraw from your portfolio, you're locking in less losses than if they were in more volatile stocks. A lot of retirement plans ask you when your retirement year is or retirement age is. and they will manage your plan according to those goals. So if you have a 401k with an employer and you know it's being managed, don't be too worried, but definitely look at where your assets are allocated at the moment. So you might be wondering why I'm so confident in my investment goals in my financial plan. So I'm going to explain to you the basics on why I'm confident in investing in the market that looks like it's probably going towards a recession at the moment. So number one, I have an emergency fund for about 3 to 6 months of expenses. I don't care if the market keeps going down. I invest with money I don't need. Money that was specifically allocated to invest through the budget I created. Fortunately, my job is also considered to be essential. We make various products including disinfectant and alcohol sterilizing wipes. I have a guaranteed income, and if I didn't, I would definitely pull back and keep my money as cash rather than investing. Number two, the market will eventually go up. So I've used this example before. The S&P 500 has never had a negative return for any position held for more than 20 years. Let's look at this example. Let's say you invested $10,000 in the S&P 500 at the worst possible time, October 2007, which was more or less the peak before the 2008 crash. If you sold all your stocks at the bottom of the crash in March 2009, you would have only about $5,000. If you held until March 23 instead, you would have $11,032. And in the span of 6 years, you at least didn't lose any value. Now, if you held until today, you would have $18,733.60. which is an annual return of 5%. Yeah, it was a 13-year hold, but your money has almost doubled. This is the power of time in the market and why it is so important to invest while you're younger. Number three, I am a dividend investor, so the price of the stock isn't so important to me. I plan to one day use the dividends I get from my stocks as supplemental income and maybe be able to pass it on to family. You can argue that true wealth building comes from buying great stocks at great values and later selling them when they're overvalued. Instead, my thought process is I'm investing in a business. You're paying for that machinery, the rent, the wages, and you get some of the profit in the end. When you're earning a profit from a business, you don't go right to sell it off. You invest in it more in hopes to make more profit in the future. So from my perspective, I'm putting money into a business that is cash flowing. So since January, let's go check this out, my dudes. So since January, I've received $74.71 in dividends, which would total to about $300 at the end of the year. It's only about 3% of my portfolio value, which is probably even less than the money that I put in considering how much it has decreased. That's invested money that I didn't need, which made me money I didn't have to work for. Instead of investing, I might have just used the money on something that is less valuable to me, like maybe just fast food, a new computer part, or maybe a new car. Number four. A dropping market means cheaper stocks. As the market universally drops, it just means the price of the stock is dropping. The stock still represents a company. The stock represents a piece of all their equipment, all their manufacturing, all their storefronts, and all their assets. The market might tell me my stock costs less, but that doesn't mean I'm not getting a dividend. It doesn't mean that I don't own a portion of that company. When the price drops, I still own maybe 1/1,000,000th of the company, regardless of the price. Instead, this actually gives me an opportunity to own more of the company I value. This is the process of dollar cost averaging. You don't time or predict the market. Instead, you average into it. You consistently invest so the price of your shares average out. Research shows that people that dollar cost average do better than those who try to time the market. You trade risk and reward for consistent rewards instead. So since I have a stable financial base, and my financial goals are consistent dividend investing, my strategy is very simple. Buy and hold. Buy with the money I don't need and hold for many years. It's very simple if that's the strategy you want to apply, and for a majority of people, it is the best strategy. If you're a growth investor, day trader, or swing trader, these times are very stressful. The returns are much higher, but there is more risk and more work involved. I'll be honest, the value of my portfolio has dropped by $10,000, but I still own those stocks. In 10 years, all of this will be irrelevant. So to the people that are my age, my advice is have a budget, have an emergency fund, pay off high interest debt, and invest for the long term. It sounds easy, but it's not possible for everybody. Whatever step you're on, just keep on it. It's a financial journey and not a race. Every little bit you do now will benefit you in the future. Maybe wait for that video game to go on sale. Make outfits from the old forgotten clothes you have. Plan a cheaper vacation. You know, when you can actually go on one. After all the chaos caused by this pandemic, there's still some benefit. On my run yesterday, I saw families spending time together in front of their houses. Some had the grill going, siblings biking on the street, and neighbors chatting a good 6 feet from each other. You're worried about the future. You want to stay safe. and you want your family to stay healthy. This has given everyone a moment to be with their family. And I think despite a lockdown, that is truly time well spent. I just really wish I got a haircut last week. I hope this gives you a better understanding on long-term investing. Since you have so much time at home, you should look into your financial future. If you have a stable financial foundation and are looking to start investing, I have referral links in the description for accounts I use. If you use the referral links, we both get free money or stocks. If you want a more in-depth explanation on tax advantage accounts or taxable accounts, check out my last video. If you want to join in on our financial journey, subscribe for more. Stay healthy, and I'll see you all next time.